till now you have studied about the forms of or business organization of sole proprietorship and joint Hindu family business. Today we will deal with the another form of business organization, that is partnership. You know the meaning of partnership, where more than one person is involved in the business entity. The common business will be one, but there will be more than one person who will be involving into the business. And you know that partnership is a very common word. If we need to define it, then partnership is that relation between the persons competent to make contracts who have agreed to carry on a lawful business in common with a view to private gain. It means for a private gain, lawful business when more than one person agree upon a common deed to carry on a business, then it is known as a partnership. So I hope with the definition it is clear that what the partnership is. So after getting known the meaning of partnership, we will move on to the features of partnership. So the major characteristics of partnership are: first, formation; second, liability; third, risk bearing; fourth, decision making and control; fifth, continuity; sixth, membership; and seventh, mutual agency. So these are the features of partnership. I repeat once again and then I'll explain you one by one. It's formation, liability, risk bearing, decision making and control, continuity, membership and mutual agency. Now these are the features of partnership. Now we'll see on to the detail of it. If we talk about the formation, the meaning of formation is how it is formed. It means any partnership organization, what are the means and ways to form the partnership. So partnership is governed by the Indian Partnership Act of 1932. Now it is 2013. It comes to an existence through a legal agreement among the partners. Legal agreement among the partners means legally they are agreed upon to the common agreement, common deeds for how they are going to conduct the partnership. Here one more important point is that the business must be lawful and should be run with the motive of profit, with no other sense. If two people work together for charitable purposes, that will not constitute a partnership. The reason is they are not generating the factor income. They are doing out of the love and affection, which will not be counted as a profitable business. Second feature is liability. You know the meaning of liability, that what all things are outstanding towards us which we have to do or which we have to pay. So the partnership of the firm have unlimited liabilities, because the meaning of it is their personal assets may be used to pay off debts of the business in case of insufficiency of business assets. Means if there are insufficient business assets and at the 11th hour there is a need to get some more financial resources, some more business finance, then sometimes it may be paid by the partners by themselves from their own pocket. So in that sense it holds an unlimited liability. Now partners are either jointly or individually which are liable for the payment of debts. If they are jointly, then all the partners are responsible for the debts and contribute in the proportion to their share. In the proportion to their share means if there are two partners, their share is 2:3, and if they need to contribute some fund, so one will pay 40 rupees, another will pay 60 rupees in the ratio of 2:3. Second is individual liability. Here each partner can be held responsible to repay the debts of the business. However, such partners have the right to recover the proportionate contribution from other partners. It means whatever individually they are giving, they have the right to get it recovered from another partner. So by now we have finished two features. One is formation, another is liability. Now we'll be moving on to the third feature of partnership, that is risk bearing. You know what the meaning of risk is. Higher the profit, higher the risk. You have studied in the chapter 1 about risk. So the partners bear the risk involved in running a business as a team. Of course, there is a risk. If there is a loss, all the loss are to be borne by all the partners. If there is a profit, all the profit will be distributed among the partners as per the ratio they have involved the money. Next is decision making and control. It's a single point, decision making and control. Now it comes to the decision making. Now if the partners are more than one, that is very obvious. So who will take decision and whose decision will be agreed by all? That may be the question. So in a partnership firm, partners shares among themselves the responsibility of decision making and control of day-to-day activities. Now it is totally on their mutual concern. Somebody is taking the responsibility of finance, somebody is taking for the execution of work, somebody may be taking about the staffing or the recruiting the people. So their responsibilities are different, and according to their mutual consent, they take the decisions, and all the controls and decision making are divided according to their own agreement, or we can say the mutual consent. Hope it is clear. Then we'll be move on to another feature, that is continuity. So partnership gets automatically dissolved on the death. It means if any person dies among the partners. Retirement, if any person want to finish his job as a partner. Insanity or insolvency means if the firm gets dissolved of any of its partner. So if the remaining partners desire to continue, then they may do so on the basis of new agreement. Suppose there are 5 to 7 partners. One dies, one goes out from the partnership deed, or if the firm dissolves and they want to regain the partnership firm, then the remaining partners, they will frame a new agreement according to their mutual consent. So that is how they can continue their firm. If they are not making any new agreement and they finish with the insolvency, then the firm cannot continue. Now membership. There is a rule for members, at least 2 members. That before also I said there should be minimum of 2 persons to form a partnership firm. Section 464 of the Companies Act 2013 provides that the number of persons in any partnership shall not exceed 100, subject to the limited prescribed in rules. It means it's in simple language, minimum 2, maximum 100. Now rule 10 of the companies, I am telling about the rule 10 because sometimes it may ask in MCQ also. So the rule 10 of the companies rule 2014 provides that no partner shall be formed consisting of more than 50 persons. So now the limit as of now is 50 partners. So as far as 2013 is concerned, 100, and after 2014 it is 50. So in short, the limit of partners are minimum 2, maximum 50. Then next is mutual agency. You know the meaning of mutual? Mutual means among the people, among themselves. So according to the Indian Partnership Act, partnership business is carried on by all or any one of the partner acting for all. It means either all the partners are dealing or any one among them. Again, it is on their mutual consent. It means every partner acts in the capacity of an agent as well as a principal. Means all are equally liable for all the conduct of business. Now, I told you 2 words, as an agent or as a principal. As an agent, he means partner. As an agent, he represents other partners and thereby binds them through his acts. And as a principal, he is bound by the act of other partners. So I hope the things are clear. Now I explained you the features of partnership. So the main characteristics are formation, liability, risk bearing, decision making and control, continuity, membership and mutual agency. For preparing the notes, you may listen it once again and you can write all the important points as per your convenience. So today we are finishing with this. Thank you.